Yes. Now we take an example and we'll pass the journal entry for the transactions. So journalize the following transactions. So now we are going to study how to pass the journal entry. Okay. So see the example. On 1st April 2017, business started with cash of rupees 1,50,000. On 1st April, we started business with a cash of rupees 1,50,000. Now we know that a person who is going to start the business is going to be called as owner. So owner has started a one particular business with cash of rupees how much? 1,50,000. So owner has introduced money into the business. He has invested money into the business. And how much amount of money he has invested? 1,50,000 rupees he has invested in the business. As we know that whenever we do accounting, we always think from business point of view. You always and always think from whose point of view? Business point of view. What is coming into business? What is going out of the business? So you need to think from business point of view. What is happening in the business? So you know that when cash is being introduced into the business, cash will come into the business. Now, whenever you pass journal entry, first you need to find what two things are changing in the business. As I mentioned you, as per dual aspect concept, every transaction, every business transaction will make two changes in business. First you identify the two changes. So in this, two changes are, first is cash, because cash is going to come into the business. So cash is going to change in the business. Now whatever the money the business has collected from the owner, business is liable to repay in future. It's an obligation of the business that it has to repay in future. So that money what business has to pay to the owner in future is called as capital. Capital means amount invested by the owner into the business. So because of this transaction, two things are changing in the business. One is cash is increasing in the business. And who has invested this cash? Owner. So business is liable to pay back this money to the owner in future. So business has to record that this much of money I need to pay to the owner in future. So what are the money they need to pay? It is called as capital. So here only two things are changing. One is cash and next one is what? Capital. So first we found out the two changes. Next what we need to do, whatever these two things has changed, cash and capital, you need to find, is it an asset, is it an expense, income, liability or capital? You just need to match what these two things are out of these five terms. Is it asset, expense, income, liability or capital? Now, cash. Just assume that you have plenty of cash. Cash is an asset. See, listen, either cash is coming into business, going out of the business, doesn't matter. You know, cash is an asset. Is it coming in or going out? It will be an asset only. So you have plenty of cash available with you. Or cash, we know that it is an asset. Next, capital is capital itself. Out of the five terms, capital is capital. Next, now you check these two things, are they increasing or decreasing? So we know that when cash comes into business, cash will increase. Asset is increasing by 1,50,000 rupees. And even capital is also increasing. Earlier capital was 0. Now owner has invested 1,50,000. 0 plus 150. So capital is also increasing. So in this, both the things are increasing. Cash is also increasing and even capital is also increasing. So totally three things we have done till now. What three things? First, identify two changes in business due to the business transaction. What two things are changing? First, you find out that. One is cash and one is capital. Next, what are the two things have changed? Cash and capital. You just match it. Is it an asset, expense, income, liability, or capital? We know cash. Cash is an asset. Be careful. Let cash go out of the business, come into business, doesn't matter. Cash is always an asset only. Furniture, let it go out or come in. It's an asset only. Machinery, let it go out or come in. Increase or decrease. It's always an asset. So, cash is what for us? Asset. And capital is capital. Next, what you have to do is find those items. Are they increasing or decreasing? So, we need to check because of this transaction. Cash and capital, have they increased or decreased? Cash also increased, capital is also increased. Now, last, what you need to apply the rule for debit and credit. What a debit credit rule is there? Apply it and you will get the final answer. Apply debit credit rule for final answer. Now, what is that rule we discussed? Due to any business transaction, if asset is increasing or expense is increasing, then we should do debit. So here asset is increasing, so we have to do debit. It means cash account will be done debit. Next, capital. Whenever income, liability, or capital increases, we do credit. So capital increases, what we do? Credit. So it means that cash should be done debit and capital has to be done credit. So the journal entry will be cash account debit to capital account. Debit 1,50,000 and credit 1,50,000. So cash we are going to do debit and capital we are going to do credit. Narration. Narration will be being capital introduced. Yes. Let us take second example. On 1st April 2017, goods purchased from Manisha. We have purchased the goods from Manisha. So if you remember, we discussed that whenever in the question only name of the person is being given, only name of the party or name of the person is being given, and nothing is mentioned regarding cash is being paid or cash is being not paid, nothing is told, then it is going to be a credit transaction. Whenever only name is being given in the transaction without mentioning anything about the cash being paid or not, then it is called as which transaction? Credit transaction. So we have purchased goods from Manisha on credit. We have not paid the money. We are going to pay the money in future. How much amount? 36,000. Again. For this again we'll find what two things are changing in the business. First, think from business point of view. Always think from business point of view. If you purchase the goods, goods will come into the business. Goods will increase in the business. So first thing is what? Goods. Next, whatever this 36,000 of goods we have purchased, we have not paid money for this. We are going to pay the money in future. Amount payable in future is your obligation. You have to make the payment of this money in future. Amount payable in future is called as liability. So goods are increasing. Along with that, you have not paid the money. Because of that, what will happen? Your liability will increase. You need to record a liability in your books by 36,000. So one more change will be we record a liability and name of the liability is going to be called as Manisha. So here two things are changing. One is goods, the other one is Manisha. First, goods is an asset out of that 5 terms. Assume that you have plenty of goods available with you. 10 lakh or 20 lakh or 30 lakh rupees of goods are available. Goods is an asset for you. And when you purchase the goods, goods will increase. Goods will come into the business, goods will increase. But have you paid the money? No, you have to pay the money in future. So it's a liability. You have to record a liability in your books because you have to make the payment in future. So you have to create a liability. Creating a liability means increasing a liability. Either you say that you record a liability, create a liability, or increase liability, all are same. So asset is increasing. We do debit. Asset increases, we do debit. Liability increases. Liability increases, we do credit. So debit will be goods and credit will be Manisha. So goods account debit to Manisha. 36,000. 36,000. Goods account debit and Manisha account credit. We discussed one more thing. If there is any transaction relating to goods, you cannot write the name called as goods or name of the product. Instead of that, you have to write any of the four suitable name. So we discussed that whenever you buy the goods from the supplier, we have to write a name called as purchase. We are buying the goods from Manisha, supplier of the goods. We are buying the goods. So here we cannot write the name called as which one goods. Instead of goods, the suitable name is going to be purchase. So the correct journal entry will be purchase account debit to Manisha. Purchase account debit to Manisha. This is your correct entry. Don't write the name goods instead of that purchase. So narration will be being goods purchased on credit. So for narration, there is no problem. You can write in an own language. So there is no straightforward rule says that you have to write like this only. Only thing is you need to start with a word called as being. Goods purchased on credit.